Join us as we explain the impact of the first budget of Prime Minister Narendra Modi's third term.
Your investments, your future. Watch how the budget drives India's Atmanirbhar market.
From taxes to healthcare, from Manrega to Ayushman Bharat, we bring you all the policy moves.
Get expert insights on how Nirmala Sitharaman's 7th budget affects your finances.
Decode the big numbers and the new policies shaping our nation's future. Tune in to Business Today for Modinomics 3.0 live on Budget Day.
Presented by ICICI Direct, banking partner PNB.
Hello and welcome. You're watching Business Today Television and this is Modinomics 3.0 special edition of Market Today presented to you by ICICI Direct. And today we have on our show Mr. Thakkar, the head of derivatives and quant research, vice president ICICI Securities, a trusted brand with which you can live the and life. That is meet your aspirations with research-backed investments. Warm welcome to you, Jay, and thank you so much for taking the time out for this discussion. Well, right ahead of the big bang union budget that everybody is keeping an eye out on, and of course the economic survey that will be tabled in just a couple of hours from now into the parliament, your own sense, how are you really advising stock market investors, traders to really look into the market right now, position themselves? There is some sigh of relief, green ticks emerging back on the Nifty after Friday's crash. So how are you looking at the market setup?
Hi, very good morning to you, Sakshi, and thanks for having me on the show today. Well, see, as far as the Nifty is concerned, I would first talk about the budget and the volatility. Sakshi, so this time you have not seen much uptake in the volatility. I mean, the IVs are too low relatively, so I'm sure that the option sellers will not be much comfortable here selling at these IVs. If something is negative in the market going forward, then definitely there will be a good room for the IVs to go up, and then markets can be further volatile. But as of now, if you look at the weekly options data, I mean, this is the monthly expiry as well. So if you look at this series data, Sakshi, then I would say that 24,000 levels is where you have seen the highest build up on the put side, whereas 25,000 on the call side is where you have seen the highest call OI build up. So that's a clear range of 24,000 to 25,000. That's point one. Point two is, as I said, is IVs are low. So, there is a high probability of market being into this range. Point three, Sakshi, which I would like to mention is that if you look at this, tenure of, NDA, this is the third tenure, as you said, Modinomics 3.0. So, since 2014, if you see, Sakshi, budget day has been within a range of, say, 2% up and 2% down. So that's the range of 4%. I mean, I've analyzed for 13 past budget sessions, which includes the interim budgets as well of this government for past 10 years. So that makes more relevance rather than looking from 2000, right? So it's been within this 4% range. So Nifty is right in the middle of the range. 2% up from here on will be 500 points wherein you have highest call OI, and 2% down from here in is where you have highest put OI. So I think that it can be a budget which can be within this range if there is much negative about the capital markets, taxation part, maybe there is increase in STT, or maybe some changes, or major views or changes taken in LTCG or short-term capital gain tax. Then there can be it can be taken negatively. Else, I would say that if there is not much capital markets specific negative, then overall it would be like as usual, growth oriented expansionary budget. Of course, there is certain expectation of this budget being more of populist because of the election outcome which we have seen recently in the election. But then I think that with the kind of GST collections and with the kind of RBI dividend which the government has received, more than 2 lakh plus crores, it would be they would be a comfortable zone to achieve both growth oriented as well as being a bit populist.
Okay, so Jay, now comes the question, which are the sectors that are likely to benefit the most from their budget? Are there any sectors that might face challenges also due to the budget or the policies that could be announced? What is your own sense?
Well, see, Sakshi, I would say that what is the need of the hour right now. If you see that in the budget, in the previous budget as well, we have seen an expansionary budget wherein we have seen government or the FM, Honorable Finance Minister, talking more about capex spending, infra. I mean, we have seen the highest allocation to the infra, defense, railways, and these sectors actually have already proven quite a lot, right? Now, since we have to move from a 3 trillion economy to a 5 trillion economy, which is the 5-year plan of the this government as well. I mean, these sectors require more allocation. We have already seen from the stock market perspective also. If you see all of these sectors, the prices of the stocks have really skyrocketed. Right?
Yes.
But then there are other sectors as well, Sakshi, wherein the focus is required to have an overall holistic view. If you take on the markets overall development, if you say sabka saath sabka vikas, if you say, I mean, I think focus more on the financial sector positively is required, because without that, I mean, that's the backbone of the economy. I mean, that contributes quite a lot to the GDP as well. I mean, the export push should be there should be focused, because it's just not the internal consumption but the exports as well can help the government to increase or have a positive impact on the GDP. I mean, these sectors, if you see textiles, agri, they have not been much in focus in the past, like railways or defense, and they have grown quite a lot. So these sectors, wherein there is a lot of organized and unorganized sector and a lot of I would say employment generated as well. I mean, whether you say agri, which focuses on from the election point of view as well. So agri, I would say apart from that, I would say that reality. I mean, reality is also very much important. Actually, I would say, because that also contributes quite a lot to GDP. There is a lot of employment there.
Yes, absolutely.
Focus is also required apart from the general. I mean, otherwise, whenever you ask, what's there in the budget, I mean, it's a no-brainer always. There will be always spend on infra and railways. But what apart from that? So I would say that export-oriented sectors, companies should be focused. Some good, incentives should be given to them. Along with that, agri, textiles, and realty. I mean, these are also required, to have an overall growth in the GDP. And finance is always required.
Okay, right. Jay, also help us understand, have you looked at any of the key stocks that one could really keep on their watch list? And probably those are the stocks within these sectors that you highlighted that could be the big beneficiaries that investors and traders should look at, maybe today and tomorrow?
Well, I would say that Sakshi, IT has bounced back quite a lot.
Yeah.
Although we did not have good numbers from Wipro, I mean, as well as not a good guidance from Wipro as far as the growth is concerned. But apart from Wipro, if you see, the other large cap IT names like TCS or Infosys, I mean, which has good weightage on the index as well. I mean, there the outlook is quite positive, and also looking from the global perspective, was actually then the overall global markets are also into recovery stage, and this is the US election year. So, like we had an election year, and prior to election we had a pre-election rally. I'm sure that would continue going forward in the US as well. I mean, they would be having the pre-election rally as well. That's point one. And secondly, global markets have a second trigger as well. That is the rate cut, which is expected in September. So that would keep the market at the higher levels going forward globally. And I think IT firms may benefit out of it. Second, July, August, historically, Sakshi has proven to be good for the FMCG stocks or sectors. So I think that stocks like Dabur, HUL, ITC, I mean, despite, we have budget for the ITC, this sector looks positive for these levels. I mean, the valuation also looks a bit comfortable. But I think FMCG and IT, these are the two sectors which can provide good returns, at least in the short term. And if at all there is a volatility, I mean, they will act as a defensive sectors as well. And apart from that, I'm still bullish on healthcare and pharma. and I think that going forward, if at all there is any dip out there as well, then healthcare and pharma can also be a good sector to get into. I mean, there are a couple of stocks in this sectors, which we can discuss going forward.
Right. Well, apart from this, Jay, could you also help us understand, are there any sectors that you actually believe where a lot of froth has developed, and perhaps those are the sectors and stocks that investors should stay away from and not burn their fingers even if the rally were to continue? Probably that is a space where we are seeing early signs of some kind of profit booking and some more extension could be seen.
Absolutely. As I said, it's actually that, I mean, um, defense and railways. I mean, these are the two sectors wherein the stocks are deliver substantial returns to the investors, and which is good for the markets and for the investors, right? And but going forward, I would say that from these levels, are the valuation giving you that comfort that it can give you the similar kind of returns going forward as well? Maybe the answer is no. I'm not saying that it would not perform going forward in the long term, but expecting the same kind of returns going forward from these levels as well, I think that it would be difficult. If at all there is some correction going forward, then one can evaluate and try and get into it whenever there is a consolidation happening in this sector, because that is required. I mean, nothing can go up linearly, right? I mean, it requires some pause, some consolidation, and at that time-wise correction when happens into these sectors would be a good time to get into for a longer term. Right now, just herding, just because everyone is quite gung-ho about these two sectors, would not or may not be deliver going forward good returns as it has in the past. And maybe one can look at other sectors which have not performed. As I said, IT, I mean, that offers very really good risk reward from these levels, keeping in mind the global recovery as well. So mainly defense and railway. Apart from that, some of the power stocks as well have gone up quite a lot. Power finance stocks have gone quite a lot. So these are the few sectors or stocks which I think may require really good earnings, strong earnings, and good policy, maybe in order to take them up from these levels as well. Else, they may fail to perform.
Okay, got that. Jay, let's come to today's momentum, and let me just have some of the questions from here from today's market momentum as well. In the early morning session, we actually saw the entire market under pressure. There was bounce back, and we still see a lot of defensive sectors like pharma, FMCG. You also pointed out IT space that's bounced back after the earnings and is now showing some signs of a pickup. Today, of course, HDFC Bank, the laggard of the past, is moving on the back of good set of numbers that also came through. So some support from the banking space is also coming in. Where would you advise investors to really put in incremental money? Should it be with the heavyweight banking sector, since this is also a sector that's not very heavily participated in the run up to the budget in the last 6 months odd? Or would you say that it's better to stay defensive, get into IT, pharma, FMCG, looking at what the upcoming budget could also throw in? What could be the ideal match for some of these sectoral investments?
Yeah, so sector specifically, discussing on that, I mean, how the portfolio should be well diversified.
Yeah.
At this moment, when the markets have already reached almost the all-time highs, and it's quite near to 25,000 levels as well. So at these levels, actually, I would say that yes, that diversification is required, wherein apart from defensives, if you ask me that which are the other sectors, because I'm bullish on FMCG, IT, as I said, private sector banks are doing good overall. If you see, I mean, they are not underperforming, or the results are not as low as the street expectations, I would say. They're almost in lines with expectations. Some of them are doing better as well. I mean, few of the PSU stocks or banking stocks are also looking positive. I mean, if you look at non-FNO space, then it would be Bank of India, but I would be commenting more on the FNO segment. Then at these levels, I think PNB, Bank of Baroda, SBI also can be included in the portfolio, because we haven't seen much of the participation from these stocks as well in the last rally, which you have seen from of almost 3,000 points. So yes, banking, as I said, banking and finance, BFSI segment overall is quite important for the overall growth. Auto ancillaries is one segment wherein I think that there is much more room still left, because we have seen auto stocks or auto index, Nifty Auto has performed quite well. And based on that, I think that going forward, auto ancillary would also do good. So banking, may private sector bank, PSU bank, along with that auto ancillary, you have healthcare, IT, pharma, FMCG. These are the few sectors. And last but not the least, it would be oil and gas sector.
Yeah.
The names like BPCL or HPCL. I mean, see, going forward, I think that the oil marketing companies overall should do good. I mean, technically speaking, then they have taken off. There are huge consolidations. I mean, we have seen a good breakout coming in. I mean, stocks like MGL, IGL, or maybe Gujarat Gas for that matter, Petro and LNG for that matter. No, we have seen a good breakout from these stocks. I mean, there have been healthy dividends as well from these stocks. So I think it would be a good diversification to have these names in the portfolio as well, which are good dividend paying stocks as well, and which are likely to perform price wise as well. So that would be double benefit. The price appreciation, that is the capital gain, as well as dividend income. So these are the few sectors and stocks I think which should be included. In the portfolio names like, yes, ONGC, or maybe GAIL. I mean, these all have done good, and they're still likely to perform well from here on as well, at least from the medium to long term point of view.
Right. Jay, interestingly, we also have Prime Minister Narendra Modi's the bite as well, where he's talked about how the upcoming budget, he believes, could be the budget for Viksit Bharat by 2047. Let's listen into that bite and we'll come back to you right after the 30-second bite.
ये बजट अमृत काल का एक महत्वपूर्ण बजट है। हमें 5 साल का जो अवसर मिला है, आज का बजट हमारे उन 5 साल के कार्य की दिशा भी तय करेगा। और ये बजट 2047 जब आजादी के 100 साल होंगे, तब विकसित भारत का जो हमारा सपना है, उस सपने को पूरा करने की मजबूत नींव वाला बजट लेकर के हम कल देश के सामने आएंगे।
So you heard the Prime Minister Narendra Modi talk about what he believes the upcoming budget could be ushering in for the economy at large. Jay, at the end, I just wanted to understand from you, we've discussed far and wide the key sectors, strategies, everything that investors should be following right ahead of the budget. Are there any risks or uncertainties that the market could see following the budget? Is that something that investors should be aware of?
See, I would say that it's just on the taxation part. I mean, where the finance ministry, if at all, makes certain decisions which are not favorable going forward for the capital markets, or maybe from the investment point of view, which will be taken negatively, I would say. Else, I don't see much of the negative. I mean, that could be the main trigger. And level specific, if I discuss, then yes, 24,000 on Nifty. I mean, if that breaks, that would be a further indication that that's not positive. The IV is going up from here on because they have a good room. See, IVs have not gone up in anticipation, Sakshi, that there would not be much negative coming out of budget. Second point is that if you look at the FIs data, I mean, we had a good sell-off in the past week, especially in the broader markets. But then if you look at the FI participation, that's been positive. I mean, that buyers in the equity cash segment, DIs have also bought it. So, overall, if you see then on the futures position as well, then, they're almost like 79 to 80% long, in index futures. So, FIs, I mean, if you see a month back, a month and a half, when, there was general election outcome, Sakshi, they were net short, I mean, almost 13-15% long. So, they were short almost by 85%. And markets reversed quite sharply on the upside. And now, since a month or so, July series, I mean, we have already seen 26 to 28,000 crores, investment by the FIs in the equity cash segment, and that looks quite positive. And if at all there is any negative, then low IVs, high long FI positions, and if anything is not favorable from the capital markets point of view, from the taxation point of view on the direct tax side of, and from the market side, then there would be a good profit booking wherein 24,000 levels can break, and if those breaks, then you would further see the increase in IVs, and that may trigger further sell off, or maybe that may reverse the trend entirely from up to down. Yet, since after past 2 days of sell off in the last week, we haven't seen the trend overall reversing that much. There is all confirmations from the price wise as well. The momentum have weakened. Actually, but the prices have not so far given that confirmation of a reversal from up to down. But if
Okay.
these crucial levels break, then of course there will be negative going forward.
Okay, we'll keep an eye out on that one then. Well, many thanks, Jay, for being with us on this very special edition and helping our viewers really make sense of what to expect from the upcoming budget from the stock market perspective, the key strategy to follow right ahead of it, the sectors that could benefit, and of course, following this, what could be the big risk factors, all of it in our summation in this special edition. Always a pleasure to host you on Business Today Television, and thank you so much for making time for this very important day. Right ahead of the budget and helping our viewers with all your insights. Thanks.
Thank you. It was a pleasure. Thanks.
All right, viewers, we'll wrap it up at that, but do stay tuned as Business Today Television is getting you the far and wide coverage on the budget, today the economic survey, and of course for all of you investors, what is it that you need to do right ahead of the budget? What do you need to do post the budget? Everything, all the conversations with top market experts, economists, everything lining up for you. So stay tuned. This is your one-stop destination for the upcoming budget. Join us as we explain the impact of the first budget of Prime Minister Narendra Modi's third term.
Your investments, your future. Watch how the budget drives India's Atmanirbhar markets.
From taxes to healthcare, from Manrega to Ayushman Bharat, we bring you all the policy moves.
Get expert insights on how Nirmala Sitharaman's 7th budget affects your finances.
Decode the big numbers and the new policies shaping our nation's future. Tune in to Business Today for Modinomics 3.0 live on Budget Day.
Presented by ICICI Direct, banking partner PNB.